Hi, everyone. My name is Blair with FranNet, and today we have Christine Hansen with FranFund on this educational webinar. And today is just a chance to kind of ask some frequently asked questions around financing and funding in the franchising industry. If you're watching this webinar, you're probably fairly serious about considering franchise ownership as a possible business methodology, or possibly quite well down the path with franchising and may have identified the franchise that you want and trying to figure out, how am I going to pay for all this? And so today we have Christine Hansen with FranFund, and FranFund is one of the premier franchise lenders within the industry. We have had many clients go with FranFund to get their financing done to be able to purchase a franchise. And we just kind of want to do some brief introductions as well as go over some frequently asked questions around financing. And so here we go. Christine, can you kind of introduce yourself and FranFund?
Absolutely. Well, thank you, Blair, so much for having FranFund and myself have the opportunity to discuss what potential franchisees are doing to get their business up and running today. And FranFund, we're located in Fort Worth, Texas, right in the heart of Sundance Square. We've been in business for 17 years now. And our name, like FranFund, we do specialize in franchise funding. And myself, Christine Hansen, I am a senior funding consultant with FranFund. And actually, this month, I will be celebrating my 7th year here. And it's been such a great ride so far. I absolutely love what I do. And really, my goal as a senior funding consultant is to educate potential franchisees and business owners on what their available funding options are based on their specific situation, so they can fulfill that dream of being a business owner.
That's awesome. Thank you. So there's all kinds of different ways of financing a potential purchase of a franchise, right? Would you mind kind of
Absolutely.
going over those various methodologies?
Absolutely. And how I'm going to do it, Blair, is I am going to break it down into 4 categories because they typically fall into these 4 major areas. So the first area is going to be equity funding. The other area is asset-backed funding. The third category is debt funding. And the fourth is self-funding. So when we're looking at equity funding, this is a situation where maybe you're planning on bringing on a business partner or investor that will provide you with the capital that you need to start up your new franchise in exchange for ownership equity. So that would be something along those lines for equity funding. Now, the second thing would be asset-backed funding. So this includes equipment leasing. So maybe you're looking at a franchise with Blair and the business requires a decent amount of equipment. So that's definitely a path for funding we see franchisees take if there's a need for equipment there. And then also too, when it comes to asset-backed funding, if you do have non-retirement investments like stocks, bonds, mutual funds, we do see potential franchisees ever so once in a while reach out to their wealth management firms, their financial advisors to see if it makes sense to do a securities-backed line of credit or a loan against those portfolios. And then the third item that I mentioned is debt funding. So this could be something like a home equity line of credit. So maybe you're wanting to work with a mortgage lender or a credit union and determine if that's the best path for funding for you. But an also popular option when it comes to debt funding is small business loans, specifically SBA. And that is something here at FranFund we do help franchisees and small business owners with. And then the last option, as I mentioned, is self-funding. So of course, cash is an obvious option. And you can self-fund if you have the resources there with the cash you have in savings and checking. Or there's also a common funding strategy that some of you may or may not be aware of, which is regulated by the IRS and Department of Labor, called the ROBS program, where you can fund your business tax-free, penalty-free by utilizing retirement funds you have from prior employment.
Gotcha. Okay. So there, I think I heard home equity line of credit. I think I heard line of credit against your personal portfolio, stocks, mutual funds, which acts just like a HELOC. You don't have to sell the stocks or mutual funds, just take a line of credit against them. I heard small business loan, which a lot of people refer to as an SBA loan, if you will. Not obviously the correct terminology, but it's what everybody refers to it as. And then I heard the ROBS program. Can you go into a
Exactly.
little bit more detail? I would say most people that come to us, they say, hey, I think I want to consider an SBA loan, a general small business loan. Can you kind of give a lay of the landscape of how that's working right now?
Absolutely. So banks today are very active right now when it comes to funding franchisees with SBA loans. They can fund anywhere from 100,000 all the way up to 5 million. And from a structural perspective, the Small Business Administration, they're not going to directly lend the money for you to start a new business or franchise, but instead they provide a backing to banks across the country to provide these loan products to entrepreneurs. So the availability of these loan products are out there, which is why you probably hear about them so often. And a lot of banks that you speak to typically utilize that product.
Mhm.
Now, when it comes to the requirements for SBA loans, we get that question all the time. And I'm going to break all this also into 4 different areas as well. And the first area is going to be credit history in general. And the other is going to be cash injection. The third is going to be potentially collateral, and I'll explain more what I meant by potentially. And then the last would be calculating your monthly burn rate. So when we're looking to apply for an SBA loan, credit history is the first thing that they'll look at. Typically, SBA banks like to see at least a 680 and above credit score. Now, if a life event happened, like a bankruptcy, short sale, foreclosure, which life does happen, then a bank will typically want to see that that event happened 5 years or more older, and that you've had favorable credit history since that event. Now, when it comes to cash injection, which was the second requirement that I mentioned, that is skin in the game. So that's putting your own cash towards the project, and then the SBA loan will fund the remainder. And what we typically see is 20% cash injection requirement, and then an SBA bank will lend you the remaining 80% through the small business loan. Now, that percentage could vary. It could be lower or higher than that, just depending on the loan amount, industry, your personal financial situation. But that's what we commonly see there for that requirement. And then when I mentioned collateral potentially being a requirement as well, is because when it comes to SBA loans, that if the loan amount is below 350K or less, a bank may not require personal collateral from you as a borrower tied to a personal asset. But what we're seeing in today's lending environment is that when collateral is tied to a personal asset is typically if the loan amount is 350K or more. And the most common ways to fulfill that requirement would be putting a lien, secondary to a mortgage. And then worst case scenario, if there's ever a default on that loan and that property was sold in the future, then those proceeds would need to go towards paying that SBA loan back. Or there could be other options available depending on the person's asset situation for that. Now, the last thing that is calculated and look like when obtaining a SBA loan is calculating your monthly burn rate for your first 12 months as a franchisee. So when calculating your monthly burn rate, they're going to focus on your 3 main expenses as a business owner, your first 12 months. So you have your personal living expenses you already have now. You're going to have a business loan payment if you take the SBA loan path. And if you're looking at something brick and mortar or retail, then you would have a lease space that you would rent out for your franchise location. So all SBA banks want to understand, because they're conservative in nature, is that in that unlikely event that you did have to personally step in to cover any of these expenses beyond the business, that you did have other resources just in case as a safety net. And these could be combined resources such as reserves, extra cash on hand, or maybe you have a spouse or yourself that is obtaining some outside income. So those are the main things that we're seeing in today's SBA lending environment. Also, what it would take to obtain an SBA loan in today's world.
Typically from application to the money's in the bank, able to be used for the business. About how long are you seeing SBA loans take?
So it depends on if there is real estate involved. So some folks don't realize that an SBA bank won't distribute the loan money until you start construction, where you're converting that lease space into that brick and mortar model. So that timing can definitely be impactful, especially if you're negotiating your lease and kind of figuring that piece out. So I would say if real estate is involved, we're definitely seeing it more into the 60, 90 to 120 day process, or even months, depending on that piece of the puzzle. But if it's just a service or home-based business where we're not going to have to secure that lease or location, I'd be comfortable saying about a 45 to 60 day process right now.
Great. So probably one of the most common sources of funding that we see our clients go after, which you mentioned earlier, is the ROBS program, which most people have never heard of. Can you kind of go over the ROBS program and how that works?
Absolutely, yes. And I think that, ROBS stands for rollover for business startup. And so I guess maybe the F is silent, I'm not sure, but it's ROBS. And it's actually governed by the IRS and Department of Labor and has been a part of the Internal Revenue Code since 1974. So this is not something that FranFund or any other funding organizations have created. But what it does allow you to do is, if you do have retirement funds from previous employment, so maybe you worked for a corporate job and have a 401k plan, and you have separated, of course that account would be eligible. Or maybe you worked for a nonprofit and have a 403b, or a veteran and you have a TSP, which is a thrift savings plan, or maybe a traditional rollover IRA. So any of the retirement funds you have from prior employment, as long as they're not Roth IRAs where the taxes have been taken out, would be eligible to be used. And again, this program does allow you to access those funds and invest them into your business tax-free, penalty-free. So if you are wondering how it works, Blair, I'd be happy to explain that to you as well, if you feel that would be beneficial for today's presentation.
Yeah, so I would say over half of our clients that do some sort of financing probably do go the ROBS route. It's
exactly,
you're your own bank, right? And what I hear from my clients is that they'd rather use their own personal funds and, like I said, be their own bank compared to having those funds at the mercy of the stock markets or whatever mutual funds that they're investing in. So they're like, hey, I can take some out and invest it in myself and in my own business, which I have way more control over.
Exactly. And I love that you brought that up because it's so true. I talk to folks every day and all day long, and they're like, well, why wouldn't I bet on myself in this fluctuating market? So we are definitely seeing folks utilize this funding program, whether they want to fully fund their business with it, utilize in combination with cash, or even a loan, or the other options that we discussed on our call today. So yeah, happy to explain how this transaction works.
Great. And that's actually a good point. People can do a blend of these options, right?
Absolutely.
So they can use cash, ROBS, and an SBA loan.
Yeah, and we really see that in that diversification of funding, especially with multi-unit ownership. So I think one of the really great things that FranFund does, because we do specialize in franchise funding, is we really educate folks on what they're trying to accomplish. So if that is to be a multi-unit owner, diversification of funding your expansion and what that would look like. So yeah, absolutely, a combination is very common and very acceptable when it comes to the options that we're talking about in general today.
Great. When should somebody consider speaking with somebody such as yourself and FranFund, start learning about financing?
Well, we typically see that, they're working with a expert in the field, such as a franchise consultant like yourself, to give them just the basic understanding of being a franchisee, giving them exposure of the great franchise brands and opportunities that are out there and going through your process. And we really like to align it with your process and ours. So when they do start asking questions about, well, how are folks funding this? Or, why don't I just go to, my bank? Or, they really just start having those questions. And then also too, when you're in a franchise process, there's typically a part in the process where you're going through the unit economics section, where you're starting to talk numbers. And so what we can do is help you take all those numbers that you're seeing in the franchise disclosure document or these calls that you're having with these great franchisors that you have connected these individuals with, and we can help them determine the best funding strategy moving forward, which does allow them to have the confidence they need to continue with your process and these processes with these franchisors as well.
Gotcha. And if the funding source or methodology that they're going after requires some type of business plan be written, are you guys able to help them with that?
Absolutely. So even though FranFund is not a direct SBA bank, we actually act as a loan consultation service. So not only do we have exposure to the top SBA banks across the country, we act as a loan consultation service where most of the franchisees that we work with have never put together an SBA loan package that they need to present to a bank to get their loan closed and funded. So we have a dedicated in-house team of folks that will consult and provide the templates needed for projections, pro formas, business plan, and everything that an SBA bank's going to want to see to get that loan closed and funded. So definitely provide that consultation there.
Well, good. I think that's a great recap of everything, Christine. I sure appreciate your time today. If somebody watching this wants to get in contact with you, what's the best way to get in contact with you in FranFund?
I would say through Blair would be great. He can give us an introduction, provide my contact information, and we'll be happy to help and see what best funding options is the best fit for your needs so you can fulfill your goals of being a business owner and a franchisee.
Yeah, so happy to do that via email. Just make a mutual connection. You'll get right in contact with Christine. So again, thank you, Christine, for your time today. Thank you to FranFund. Really appreciate your partnership over the decades that we've been working with FranFund. And again, I hope this was helpful to everybody who's watching this webinar about financing, which, like I said, is one of the most common misconceptions or questions that people have about purchasing a business. So thank you. Thank you, Christine.
Thank you.
Really appreciate it. All right. Have a good day, everybody.
You too.